Hello. I think I'm live. I forgot to start at 8:15. Shoot, give me one sec. I don't know what happened to my live stream. I don't even know if I'm live right now. I don't know how YouTube works. Okay, it says I'm live now. I don't know how to get back to. There we go. Okay, guess I'm live. All right, that's enough. My name's Frank. Welcome. Welcome to nobody again. That's okay. Once again, I do this for myself. If you're listening in the future, maybe one day it'd be nice to grow a community of people. But I am terrible at self-promotion because I think it's cringe. But perhaps I need it. I never plan on selling anything, ever. I want to become a profitable trader, not a profitable course seller or anything like that. All right, here I go. This stream is meant, I show the news, talk a little bit about the macro environment. Then I go over what has happened recently in markets, in the ES specifically, and what I think will happen and what key areas will be coming up for all of 0 people that have listened the last few times. I'm batting 100 on what I called as far as support areas. Now, did I make money on them? No. The one I screwed up yesterday because I got in way too early and I was just happy to get out flat. And then the other one happened at like 2 a.m. So you got to let those go. All right, as I go live, there was news. PCE. And the initial reaction is positive in the markets. I don't know why. These numbers are obviously lies. There's no way prices are going down. There's no way. There's no way. Who releases this? U.S. Bureau of yes. Of course, it's all lies. So now they're just gonna lie. How much can they lie? Like when you go to the store and your bill goes up every time. You go to the next week, it goes up even more, even if you buy the same exact things. Oh, but the government says it's not happening. Okay, then it's not happening. It's ridiculous. It's completely ridiculous. And year over year, they came in right in line. Yeah, okay. And durable goods orders are up? I don't believe that. I don't believe any of this. And then jobless claims are up. Oh, it just so happens that all the numbers come in exactly what you would want for a rate cut or a possible rate cut in the future. I just, well, I'm not here to get upset or feel emotion. It is what it is, and the market reacted the way it reacted. Every other number says people are getting employment just fine. But it just so happens the government numbers come in higher. Whatever. I mean, the market's been believing the AI lie for years now, so the government wants in on that. Alright, later on today we have new home sales at 10 a.m. also. Look out for that. Market might react. I forgot to mark that down. Let me do that. I have this great program. It's called To Do Later. And it does what I've been wanting Windows to do for ages, is just have a scheduling system that'll pop up when it happens. It says, hey, it's time for you to stop trading for today. Or hey, there's a news event. A very simple process, but in today's world of software as a service or AI and everything that doesn't need it, if I wanted this simple program, I would have to pay money for it. Anyway, enough of that. All right, let's take a look at headlines. All right, so more strikes with Iran, like it matters. That's not why the futures were dropping. I can tell you right now, they were dropping because people are running out of money. Because the cash supply was going low. The dollar was going up and yields were going up. I mean, there were strikes last week or the week before when we were making all-time new highs. Doesn't matter. Salesforce did bad. Figured that. I mean, that's not how the market read it. Fed's inflation gauge heated up in April, cementing that interest rates will remain steady for now. I bet you they're going to correct this. They probably released the wrong. Yeah, I don't know. If inflation, this is funny. Most Fed officials see holding rates steady for now, with the growing chorus not ruling out a rate hike if inflation becomes persistent. If inflation becomes persistent. It's been persistent since 2022. Even before that. They should have been hiking rates. They should have never started cutting. That was a mistake. But, well, if we're doing shouldas, they should have never established the Fed. It's a terrible, terrible idea. Oil rises. I didn't check oil for a while. That's enough of news. I'm trying to make these quicker because, well, tend to ramble. Earnings, what do we got? Today after close, is today Thursday or Wednesday? Thursday. This is why I don't like 4-day weeks. Dell after close, take a look at that. Dell's one of those that's been trying to pad their mediocre results with AI hype. We'll see if it works for them. But overall, I would say their sales are down because because you can't get memory for now. I'm willing to bet in a year or two, all those prices will come down and then some. And Micron and all the others will be begging consumers, please let us sell to you again. Or Chinese memory will take over, which is also not that great. And all this is the result of the Fed. That's why I don't like the Fed. In any other environment, any other time in history, you would not be able to spend this much money without income. Unless it was a giant government-funded project, which you can kind of say that the Fed is a giant government-funded project. They print money when they want times to be good, and they've been printing money for a very long time now. And when I say print money, you might as well just say tax, because it is a tax. It's a tax on all of us. Enough of that. I simply trade what happens. All right, let's take a look at prices. I ended up drawing a new range despite it's kind of part of the old range. If we dip back in, I might combine the two, depending. But before that spike, before that news release, everything was looking very bearish. As you can see, starting this week, actually. It just came to me. Some of it could be seasonal. Like heading into the summer months, the market tends to be a little muted. It's just normal. But we'll see. We need a really big bear market. And the longer they keep this up, the worse it's going to be when it does happen. But it's at a point where I think even the common person would feel relief at it. Except for their 401k taking a huge hit. All right, let's take a closer look. So yesterday, I mentioned price was likely to either climb and reject the all-time highs and pull back, or pull back. Either way, price was likely to pull back to this naked value area right here. I mean, that's the reason I use volume profiles. It can be very helpful in long-term rotations. But can you still execute? That is the question. It can be, because I didn't. I failed before this. I forget where I bought, somewhere in here. To the point where when we recovered slightly, I just got out even and stopped. So I don't even follow my own advice or my own rules. Anyway, we ended the day yesterday a little bit up. But then the overnight, we immediately came back down. Not immediately, but very quickly came back down. This time we hit the other spot I mentioned, the naked POC. And we bounced from that, and every bounce we've had has been lower, slightly lower and weaker in price action. And as you can see, we were about to get another attempt at this naked POC before the fake news. Maybe I should stop calling it fake news, because I'm going to subconsciously be skewed towards making shorts. Anyway, right now we're pressing at value area high, going for yesterday's close. I'm going to mark, before I forget, previous initial balance low and initial balance high. They often act as support or resistance, but it's not always certain, and I usually wait for a confirmation. If price holds there, then look for rotation. All right, going into the open, we've still been in this range here of 75.70 down to 75.05, basically, back and forth. It's also significant that this new range I drew, the POC, is right on the high of this old range. And we're starting to draw a profile more below that area than above it, which could be seen as slightly bearish. Over the coming days, if we head lower, which I don't know. After seeing that, I think there's a chance we're going to make all-time new highs again. But if we head lower, if we reject all-time new highs, or we reject any key area on the way to all-time new highs, I would look to going back into this range, and definitely value area high of that range, 74.50, 55, 54 area. It's going to be loose. It's going to be a loose area, not direct hit. And also we have the R1 pivot area in there. I forget what the percentage is on them, but pivot areas, sometimes they work as key areas of support and resistance. Sometimes they don't. There's few that, I mean, technically I shouldn't place a trade the second it hits any of these areas. I should wait for confirmation. When I say confirmation, that can be many forms. Usually if we stop and hold at an area, excuse me, you can see in the price action who's going to win out, or the volume. All right, back to, if we head higher, I mean, I'd say look to this previous initial balance. This one's an old one. That's from Wednesday. Overnight Wednesday. Or wait, no. That's from Tuesday. I'm yet undecided on when I'm going to delete the old ones. Not, maybe I'll just keep them all. We might hold at previous day's close right here. In fact, I think I might trade it. Just some quick scalps maybe. Again, it gets iffy coming into the open. I like to be flat, 9:30 to 10, and then we have home sales at 10. If we head lower, again, naked POC, which I don't have marked on this one. There'd be too much stuff. Well, actually, I would like to mark it on here. It just so happens that it's a prior initial balance high. That's a key area, as well as the previous day's low. If we go beyond that, I already stated the ranges value area high. But also there's another naked value area in there that was never even closely hit. I do think eventually we will get down to 74.55. I wouldn't mind that as a long-term trade. I hate holding into the overnight, but we shall see if I do it. And I would only do it if we reject all-time highs again. Even then, I would probably do like a 3 contract. I would take profit at like the first value area, not value area, the first naked value area. Well, it all depends how it comes out. I would take it in steps though, and then move the stop accordingly. But it's hard when you don't have a whole lot of money to trade that many. I mean, you might be allowed the margin, but would you want to take the risk on 3 contracts? For me, I do a 2% risk for futures. All right, that's all I got for today. Good luck, goodbye. I will be streaming tomorrow.